Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt, and in today's video, I'm going to talk about the trades I executed for August 26th. I'm going to be talking about the covered calls, the cash secured puts, why I chose specific strike prices, why I chose specific expiration days, which ETFs and underlyings I actually invested in. Then we're going to take a step back. We're going to take a look at the last 94 trading days and see how running your own options actually looks like on paper with my specific account size. I'll be talking about some of the average premiums I'm generating per day, per week, per month, and then just talk about some dream scenarios. But today will be a little bit of a shorter video because I am producing it a little bit later at night, and then I do have to go to sleep to go to work tomorrow. So I'm going to keep it nice and brief this video. First thing I like to talk about on my channel is my account overview, and that's for two reasons. One, transparency. You guys are going to see it go up in a bull market, and then you're going to see it go down in a bear market. It's just going to be, it is what it is. The second reason why I like to show it is because this is the sum of money I am dealing with. And then once we head over to when I'm planning on discussing the trades, I will then talk about my buying power and then a couple of ideas of how to generate income based off your account size. It's cool. With that being said, let's head over to the spreadsheet. All right, guys, now that we are at the spreadsheet for August 26th, I generated $356 of premium. And if we look at my account value, that was at that $179,232. I think it might be like $100 or $200 difference because the markets are still technically open and investors are still trading. In the last 94 trading days, I generated about $31,407 of income. That's either premium or appreciation gain. And I'm just going to throw a little note here. There's like two types of investors, right? There's the investors that have like the high of getting that huge win, and then they pretty much try to figure out the perfect trade setup so that they can get a huge $30,000, $50,000, $100,000 trade. I am not that investor. I am more so a consistent trader where I would prefer to make $300 a day consistently, day in and day out, versus look for that home run hit that's potentially going to give me a life-changing amount of money. Because realistically, to find the right trade setup and have the right conviction to actually trade the correct way is actually quite difficult. So for me, I rather take the consistent hits, not looking for the home run, looking for the base hits that are eventually going to lead to runs in the game. And then that's how we're going to win. We're just going to out hit the other team. And that's what we're doing. 94 trading days made $31,407. I could have been waiting for that perfect trade setup, and it may have never happened. And I could have potentially lost money because there have been plenty of times throughout the last, 18 or 20 to 18 weeks that, everything's looking green, and all of a sudden some news comes out and then the market just turns around, and that could have potentially lost you a decent amount of money. So for me, I'm just a base hitter. I continue to generate my $334 of premium a day, and I'm happy as can be. If you look at, since I started trading back on April 11th, my own covered calls, my own cash secured puts, I used to be invested into high income ETFs, but I just did not like the NAV erosion. And then having a massive correction in the market made me come to the realization that, man, holding these long term may not be the best solution. So I decided, hey, what's a possible way that I can generate my own amount, my own premium, and then don't have to deal with any NAV erosion? Running covered calls and cash secured puts, crazy. But since April 11th, we're up 22.5%. And if we look at the change in value since the last day, we're up 0.92%. And comparing that to the SPY was only up 0.42%. So what I have observed over the last couple of days of tracking, some days, if my premium was good, I can, mitigate some of the red days. But whenever I don't make enough premium to offset some of the red, because I'm heavily invested into qqq and it's a little bit more volatile, but the premium is higher, I'm going to, potentially have more red, or a bigger red day than compared to the SPY. So for August 21st, we were negative 0.77%, and then the SPY is only down 0.40%. So on the green days, I'm pretty much outperforming the SPY by double, but for red days, I'm underperforming the SPY. So give and take for what that actually means. And then maybe by year's end, I'll calculate to see what the actual difference was. Looking at the trade win percentage, I'm winning at 97.87% of my trades, 92 winning days, 2 losing days. Maybe one of these days I'll make a video, or I should just stop promising these videos. The average premium I'm making per day, I think I've mentioned this already, we're making about $334 per day. It was nice to see that today, August 26th, we made that $356. Looking at the average weekly premium I'm generating, it's about 1,570, and for the average monthly premium, I'm making somewhere around $6,484. So everything going pretty good. And there is about 86 trading days left in 2025. So we are right around the corner of, closing up the year. We still have 18 weeks left. Still plenty of time though to make plenty of income. And that's ideally what I plan on doing. Looking at this number, this hopeful number. So because there's 18 weeks left, I came up with the estimate that if I were to continue my trading performance as is, I should make another $28,000 by year's end. But on my conservative side, at a minimum, I would like to make about $1,000 a week. There's some weeks, where it's super red and it's hard to make those, $1,000 weeks. But there's other weeks where, it's easy to make $2,000. It's easy to make $3,000. So the market giveth, the market taketh away, and that's how we operate. I came up with estimates based off my account's performance because I'm not going to be able to trade for a 12-month window for 2025, but for 2026, we will have a full data set of, what I can or can't do. But ideally, if I were to trade for a 12-month period, the way I came up with this average yearly premium estimate is I took the average weekly premium I'm generating, multiplied it by 52 because there's 52 weeks in a year, and I came up with $81,658. That would be a pretty good sum of money to generate, trading own options. It takes me about 15 to 20 minutes a day in the morning to make this kind of income, right? That is crazy. I should really calculate the amount of time I put in towards trading to then how much I make per minute, per hour. That'd be quite interesting to see. For the average yearly percentage, if we take into consideration where my account started today, all the money that I put in compared to all of the gains thus far, and the estimates and theoreticals, I should make about 56% return. But once we scroll down to the side of the spreadsheet, we'll see it's a little bit lower. But what I've noticed for this average yearly premium is it ranges somewhere between 49 and 66%. So there it is. There it is. For 2025, I had a goal that was $29,000 because my account when I started options trading back in April was only $86,000. We blew past it. We're already positive $1,666 from that point. I'm just going to quickly breeze over that because there's nothing really more to tell. And let's look at this part of the spreadsheet. So the way I'm planning on operating this spreadsheet is whenever a year completes, I'm going to cell log all of the correct data that we have established from that time period. So I will put all of the income, all of the taxes, what the end of the year value is, what the gain is after taxes, and then what was the actual return once we take into consideration taxes and estimated income. So, and then the remaining cells will be estimates based off my account's performance. So for 2025, should theoretically make about $59,000. We've already made 31,000, and we should be on track to make about 28. So that pretty much lines up with this estimated income. But I would probably wait about 5 years for me to continue working because I still have a full-time day job. I'm not making enough money to, offset some of the costs that I have right now. So I still have to work. I'm, in a phase where I just proposed to my girlfriend, which is now my fiance, talking about family, talking about weddings. Basically, a lot of money is going to start flowing out of the pocket. So I'm going to have to grind out a little bit harder, continue to trade these options to generate this income, continue working my job. But ideally, by 2035, hopefully we should stabilize our funds with, more investments and things of that nature. But by 2030, if everything stays exactly the same, I should be making about $359,000 a year. I will say this, I have such a small data set and small sample size that I don't know how accurate this is going to be. I would like to dream it's this accurate, but then, I haven't ran into a bull market since doing these options trading. There was one in April, but ideally I happen to ride the bull and not the bear. But I will say this, a lot of people ask in the comment section, what I would do in a bear market. And I will highlight that. It really depends on how bad the correction is, the bear market. If it's like, a month, I'm pretty much going to do what I always do. Like, I'll feel out how the bear market works, right? So even like last week when we had a couple of like red days, 3 days in a row, I pretty much still ran daily covered calls and cash secured puts until it's like, okay, came to the realization, hey, the market is not recovering fast enough. It's not going back up. It's not being neutral. It's going negative. So maybe I should change my daily covered calls into just weekly covered calls, because then I'm still able to generate premium. It may not be a lot of premium, but I want to choose a strike price that is at my cost basis. I've got burned before where the market is trading lower than it actually is. I choose a strike price. And then because of the nature of my work, I don't necessarily have my phone on me or my trading platform so that I can quickly make a trade. So ideally, I've been burned where some of the options get executed, on my behalf, and when I should have rolled it and things like that. And there are times where I chose below my cost basis. And then even though the at the money for my option wasn't even achieved, somebody that had the long option exercised it, and I still got assigned my covered call at a specific price, but it was below my cost basis, so I lost money. Those are kind of the two scenarios I got burned by. And ideally, I will just keep taking bad premium until the market recovers. That's the one thing about investing into good funds like QQQ and SPY, or market leaders. They're going to go back up as when the markets go back up. But if you invest into bad stocks that are just pure speculation, they don't have any earnings to back up any of the performance. It's a meme stock, a meme coin, whatever you want to call it. I don't operate that way. I used to have that risk tolerance when I was younger, but once you learn from experience, like, it's not worth that risk profile. And if you would have just done the right thing instead of pursuing, quick fix, a quick, options trade with some stock you've never heard of just because, you read something online, it's like, no, just invest in the good stuff that works. That's my recommendation. But yeah, in that bear market, I would just continue trading. I might do weeklies. And if there's really a bad bear market, I might just start trading options at a monthly level. But I will not sell below my cost basis, because if you sell below your cost basis, you might be able to realize loss. That's the only real way you can lose money. And my thought process, even in a bear market, you can make some premium versus no premium. That's still a win in my book. But 2030 will be a great time to reevaluate, hey, could I potentially get off my W-2 income and just, be a full-time trader? And I wouldn't really be a full-time trader. I would do exactly what I'm doing now. And then I think 2035 would be a very realistic time for me to stop working. If I'm making $1.6 million, that better be enough money to then, continue investing, have a decent lifestyle. Even if it's one half of that or one fourth of that, I think that's still plenty to then stop working by that point. But I really wouldn't stop working. I would just find something to do with my time that I think is more valuable than going after a W-2 income and making money for a corporation or a company. Cool. Got that being said, guys, but let's look at the dream scenario, guys. 2058, we'd be making $2 billion a year. The account would be at $5 billion. I'd have to pay about $729 million in taxes. That'd be crazy. And the return would be somewhere around 36.3%. That would be fantastic. Moving on to the weekly numbers. For the week we are currently in, yesterday we had a $1,000 day. Today we had that $356 day. So we are currently at $1,377. We're about $200 away from our weekly average, and I'm fairly confident I can hit that between Wednesday, Thursday, Friday. So I think this might be, close to maybe a $2,000 week, depending on how everything plays out. But I've already won this week. I've already hit my $1,000 club. We hit, the 4-digit club 3 weeks in a row. That's exactly what we're looking for. We're rebuilding that consistency, that market recovery. And the funny thing is these last 2 weeks were relatively red, but then we're still able to generate income. And that's the one thing I love about covered calls. You can always generate income no matter what market it is. Instead of, if you're like a buy and hold investor, you're just waiting, and then all the differences in changing in price, you're just basically leaving that money on the table. I'm able to at least collect some of that money, Yes, I'm going to have to pay a little bit of taxes on it, but over time, I think it will balance out. Looking at, I did the thing again where I put the new value for the month in the month we aren't even in yet. So for August, we are currently at $5,479. I would be really happy if we can at least get to that $6,000 mark. So we have 3 trading days, so I would need just about $521 more. I think that's reasonable. I can potentially do that. We'll see what the market gives me. Yearly tracker, we're at that 31,407. And now let's go over to the individual trades I executed. Okay, this time in the video, I made sure that my face isn't covering up the numbers. That's always embarrassing whenever that happens. Okay, so for today, August 26th, this is what happened. Going into this day, we had a Oracle week-long covered call that didn't generate any money because I generated the money for Monday. That was a massive $410 day. So today, it just kept active. The fluctuation in Oracle opened at 236.38, closed at the 234.20, and is currently active. For my 3 QQQ covered calls, 2 of them I ran yesterday for a week long because the market was red and I wanted to just collect the upfront premium. And then because my buying costs are pretty away from where the market is trading, I decided to do a week long expiration, take the money up front, and leave it at that. QQQ opened at the 569.84 today, and then it closed at the 572.67. However, the Robinhood allows traders to then be able to execute options 30 minutes after the market closed, and then mine were actually assigned away because the QQQ went up to about the 573 mark after hours in that 30-minute window, so an investor just assigned it away from me. Kind of sad because I wanted to go into it pretty much at the money, but I think tomorrow I might just buy another 100 shares of QQQ at the money where it's at and then sell the covered call at the money. So the other 2 things I did for August 26th, I ran a cash secured put on the QQQ. Like I mentioned, it opened at the 569.84, and then I just run a cash secured put on the strike price of 569, bagged about $80 of premium, expired worthless because the market was actually a little bit up today for QQQ. And then the last trade I executed was a Oracle cash secured put, made $235 of premium. And yeah, and then for my QQQ covered call that I ran for the daily at this 573 price, made $41 of premium. So in total, made $356 of premium. So that was a solid day if you were to ask me. And that was only 3 trades. So maybe we can squeeze out some more tomorrow. We'll see how everything plays out. All right, let me head over to Robinhood. Let's discuss what the plan is for tomorrow. All right, guys, we are back at Robinhood. Let's take a look at my buying power. So 100 shares of my QQQ were signed away. So yesterday I was at 300 shares, and then today I am at only 200 shares. And the QQQ is trading at this 572.94. So I might just quickly buy 100 shares right now in the 24-hour market, just so that when the actual market opens tomorrow at 6:30 a.m. Pacific Standard, because I'm on the West Coast, then I'm able to just run another QQQ covered call at the money. So that would be ideal. And let's take a look at my buying power. So right now I have about $41,000 of cash. So if I were to buy those 100 shares of QQQ, about, 10, what is it? $57,000. So about, $16,000 would be on margin, but then how much premium I'm generating per day offsets the margin interest cost. So it's not even a calculation worth, losing sleep over. And right now, the options collateral I have is about $23,250. So basically, this is my Oracle cash secured put that's running right now. And the way this options collateral works is because it's a cash secured put, I'm not actually getting charged Robinhood interest on it because I don't own the shares. If I were to own another 100 shares of QQQ, or 100 shares of Oracle, then I would have to actually incur margin interest. But if you're using, Robinhood margin to run some of your cash secured puts, you don't actually get charged an interest. So then you're able, depending on if you choose your strike prices correctly, if you don't get your cash secured puts assigned, you are able to generate income using Robinhood's money without you having to actually incur costs and then, buy those shares. So that's how I squeeze out extra premium every single day, because I like to use all of my cash. All of my cash I dedicated for covered calls, and then I will run an additional cash secured puts with my available margin. And the way that Robinhood allows you to run cash secured puts on margin is called this events contracts. So this is the number that's going to allow you to run that cash secured puts. So because Robinhood's going to allow me to run $122,000 of event contracts, then I can theoretically run maybe 2 QQQ cash secured puts, or I run 1 cash secured put on the QQQ, and then I will offset some Oracle cash secured puts or Amazon cash secured puts, whatever premium looks better for me at that time. I'll just take a look real quick to see, hey, which number is better, which which stock is red, which stock is green, which stock has momentum. I'll take a holistic approach to some of my favorite stocks, and whatever is a decent premium, I'll just execute on that. Cool. So plan right now, buy 100 shares of QQQ. I'll just do it right now. Do a limit order. What's it trading? The 572.94. So I kind of want this to execute, so I don't mind getting the exact perfect, buying cost. So I'll just do 572.99. I don't like using even numbers for whatever reason. Whenever people buy stock, they'll always do like 573, 573.05. I just do like 1 or 2 cents before, so I can guarantee I buy those shares. I don't know, I'm weird like that. Let me know you guys' weird trading quirks. Okay, so we have the 24-hour market. So that's basically going to guarantee, as long as this price looks good, it's a limit order. So I will not buy anything higher than this 572.99, 100 shares, because I'm buying 100 shares because you need to have 100 shares of a stock or an ETF so that I can run covered calls against it. So cool. Everything looks good. It's going to cost me about $57,299. Let's review the order. And it's taking a little bit. Let's buy it. All right, it has been placed, and it just shot up 5 cents. What is this? All right. Well, hopefully it will execute sometime soon. Either way, we still going to look at the trade QQQ options. So to run a covered call in Robinhood, you press on this sell call button. Let's go to this 573.05. So if I were to buy, these QQQ shares at that, 573, what we just did over here, I'm probably going to choose a strike price at this 573. If it's like a $5 difference, to choose a strike price, I'm fine with that. But if it's like $20 or $30, I'll just choose a strike price one higher. But for tomorrow, if I were to buy this 573 or that 572.99, I would just choose this premium that's $232, lock it in at the money, make ton of premium up front. We don't know if the market's going to be up, it's going to be down. I like to take my premium up front, so that's how I'm operating. That would be one trade that I'm going to do tomorrow morning. We're doing a daily, so expiration date is a 0 day. Now let's take a look at the cash secured put. QQQ is still at this 573.05. For cash secured puts, I do actually want to get a little bit of a better deal, so I won't necessarily choose at the money unless I have no shares of anything and I just want to make sure these get assigned, so I'll just do it at the money. But ideally, let's take a look at what this 572 looks like. $170 for a daily. That sounds pretty good to me. I would take a look at what this 571 looks like. Let's see. If in the morning I'm seeing this $136 of premium for this 571 strike price for the cash secured put, I'll execute on it. But in the morning, this would probably get like either cut in half or it's going to be 30 to 25% lower, which then I might be compelled to choose a 572 strike price. So we will really see what tomorrow morning brings. But just based off of those two options, guys, I would be making about $368, maybe cut in half. So what, that'd still be $150. Maybe let's call it like a nice 200. That would be a good haul for tomorrow. That would put me at that $1,500 for the week. But then I still have a little bit of buying power available. I have about $60,000 to $70,000 where I can either run, a cash secured put on Oracle. Oracle for me has been paying out pretty good for these premiums. So if you guys haven't looked at that stock, highly recommend taking a gander, taking a peek, do your own research. But let's take a look what some of these numbers might look like. So it is a individual stock. So that means it's going to be a, its expiration date is going to be on Friday. So we still have about 2 more days to go. Or 3 more days to go, Wednesday, Thursday, Friday. But Oracle is trading at this 235.45. And if we were to choose a strike price that was at the money, guys, this would be $400 extra, which if I see this number tomorrow morning, I'm probably just going to do it. And Oracle's a pretty good stock. So even if you buy at this 235, that's still a discount. I think the analysts from whatever Goldman Sachs or, Seeking Alpha saying that this should be about a $260 stock. So the fact that it's at 235, just lock in the premium when you have it. So if the market is red, then I will probably choose a strike price a little bit lower. But if the market's relatively strong, I'll choose something that's at the money. So I might just run another, option at this 232.5, then bag another $300. So tomorrow's looking to be a pretty good day. But just for curiosity, let's see what Amazon looks like. Amazon's a solid stock. It's easily a $240 stock, and it's at 228. Trade Amazon options. Let's take a look at cash secured put. Same concept as the Oracle. The expiration is going to be on a Friday. So we have about 3 days to wait for this to know if we get it assigned or not. But yeah, guys, if you look at the premiums, it's pretty different. And it's only a $7 difference in price. So ideally, I'm going to choose Oracle because I am a slave to the premium. I will always take a higher premium. But it's always good to good to cross-reference. Yeah, guys, that wraps up the video. Hopefully you learned something new. Hopefully you have a different idea. You guys take a look at Oracle. I definitely been loving it. I've been racking a ton of premium while the market's kind of been in this whole limbo, waiting for either to go up, to go down, these whole rate spikes, what's going to happen in September. So it's definitely helped beef up my portfolio. But yeah, guys, let's stay locked in. Let's stay disciplined. Let's stay harvesting Matt out. And I will see you at the next video. It's going to be tomorrow.